Okay. Do you want to talk about the markets a little bit? Hold on.
Sure.
Let me screen share.
We might have in the course of this update a new all-time high for ETH. We'll see.
No,
It's
he's
very
so far
close.
away. Oh, you're right. It is very close. I lied. You can see my screen, and you
Can
can
I?
see that it is quite close. Yep.
Oh, I can see your screen.
So
Yes.
all-time high on Ethereum, at least on Binance. That's the chart I end up using. I guess I could switch to the index. Let's go to the index. The index all-time high is. Let's get real precise here, everybody. Index all-time high is right there. 40.90 and 92 cents. There you go. That's the index all-time high for Ethereum. And so far today, we are at 40.62. Oh boy. You know what the great thing is though, is we still haven't hit an ETH all-time high, despite the fact that
Bitcoin's
Bitcoin
made like every
has
day.
No, well, Bitcoin has exceeded its previous all-time high by more than 30%.
Yeah.
So 35%. So to have Ethereum not even hit its previous all-time high while Bitcoin has exceeded its previous all-time high by 35%, I still contend that that's bullish for Ethereum long term, especially with the news that broke the last couple of days about uh, BlackRock secretly acquiring like $500 million in Ethereum over the last month.
Bitcoin has had 12 days of new all-time highs since breaking the all-time high.
Yeah, dude, we're in a bull market. I think people got so like, I don't know, that lull between March and November. I think so many
Yeah.
people got impatient and downtrodden about the fact that the market was just kind of like stagnant. That they had almost forgotten for a minute there that we were still in a bull market. So,
I mean, amazing
um,
range to trade if you were playing the range.
hey, buddy, we can talk about trading later, but I had announced to the community what's happening coming up soon for everybody. We can talk about that later. When we get to, excuse me, when we get to client services. But first, I guess we'll have to keep an eye on this Ethereum situation here. I wasn't expecting it to be that close to an all-time high. For some reason, my brain remembered Ethereum all-time high like 4,200. So when it breached 4,000, I was like, all right, cool. We still got like another 5% to go. But I misremembered. Oh, it's good to know that we are inches away from that potential uh, threshold. All right. You want to talk about Bitcoin real quick? 100,000.
I'd
Big.
love to.
Did you see this flash crash yesterday?
I mean, is it really a flash crash? I feel like people just forget what it's like when Bitcoin corrects or goes down a little bit.
Well, it's the mechanics of it that make it a flash crash. Like this is a 5 minute chart, right? Like 5 minute chart on Bitcoin, and the price dropped almost 7% in within a 5 minute candle. So like the reason I call it a flash crash is because they literally created a cascade of liquidations which caused that to crash that quickly. And so I mean that's pretty much a flash.
Yeah.
And so like we in 24 hours from when it went from 104,000 to 91, there's $1 billion in liquidations in that 24-hour period. And in my opinion, that was a bunch of new people, new retail, big and small, that got really excited about breaking 100,000 and thought we were going to be rocketing up to like 120, 125. And that was the perfect liquidity hunting setup for the bigger OG players to be like, oh, really? You think that's going to happen? And then they fucking tanked the market, ate up all that liquidity. So welcome to crypto. So, so that was fun to watch yesterday. I was not trading at this time. I only made one trade yesterday. I earned 2.1%, and then I logged out for the day. I figured that was more than enough for one day's work.
Yeah, I
Um,
mean, if you were trading levels on that and you just took it as like a failed breakdown for the day when it got around 92-ish,
mm,
you made some good money. It's a nice little
yeah, I
grab.
mean, I kind of wish I was watching it yesterday because I probably would have hit a long somewhere in the 92 to 93 region. Oh,
To be
but
fair,
I
I've been
wasn't.
watching it a little bit more lately since I started trading them through the CME.
Yeah,
It's a lot nicer to trade Bitcoin through something that's actually regulated.
that's true. Well, we have our company accounts in Panama, so we have Binance and Bybit in Panama that I trade through, and so it's nice to be able to trade on the largest platforms
Yeah.
for crypto, but also because like I was just talking to another trader that we share a community with yesterday, and I was telling her that I have I literally have no day trading experience on forex, commodities, any sort of TradFi instruments or platforms. I was like, I wouldn't even know where to start. I go, however, I could talk your ear off about crypto when it comes to the analysis, different assets, the platforms that we use, etc. So it was an interesting conversation because they trade TradFi stuff almost exclusively, and they're just now dabbling into crypto. Where I'm the opposite, where I've only like last almost 10 years, 8 years, I've only traded crypto.
Yeah.
Oh,
Let's see if I can find a screenshot of that.
screenshot of what?
The how the liquidity grab looked.
Oh, all right. Are you talking about the heat map?
No, no, just literal price action.
Oh,
Nothing complicated.
well, aren't you cool? There we go.
No, I'm really not. I'm the actual definition of not being cool.
Oh, here. Oh, look at my screen right now. This is the heat map for the last 3 days for liquidity. Look at all of that. Nom 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 nom. Ate up all that liquidity. Pretty good. Anyways, I think we're off topic here. I think we need to focus. We need to focus on the monthly update. So let me pull that up. Actually, I have it up here. November 2024 end of month report. We'll run through this real quick. It's going to be similar to the last few months because of the way the market and specifically altcoins were leading up to November, the end of November specifically. So there won't be a big discrepancy in numbers for this report versus the last few because we were kind of in that lull before Bitcoin and now Ethereum decided they wanted to wake up and start playing again. So contents, November summary. Um, if you had listened to the last monthly report live, because we didn't post playback, or you listened to the previous one for September, or kind of had followed what we were talking about um, during the month of October, we expected a post-election reawakening of crypto because, especially in the United States, U.S. elections, they carry a certain amount of uncertainty and doubt with them, and generally markets don't like that. They don't like uncertainty. They don't like doubt. And once the election was done, personally, I believe it didn't matter who was going to win the election. All that really mattered was that the election was settled. We spent all this time talking through endless amounts of hyperbole about what could and couldn't happen depending on who got elected and who didn't. But all that really was just a bunch of uncertainty and doubt that is now settled. Everybody knows who's going to be leading, what the general sentiment is going to be. And frankly, it gave people one less thing to be distracted by. So post election, we had very nice breakout as expected. Second half of November, leading into December. I think right at the end of November, we had Bitcoin attempt to go to 100,000, hit about 99.4, depending on which exchange you're looking at, and then settled underneath of that until a few days ago, where we all experienced the breakage of 100,000. First time in 7 years, Bitcoin has added a zero to its price. Last time it did that was, I believe, October or November 2017. So almost exactly 7 years that it takes for it to add a zero. We'll see if it does it again within another 7 years. We'll see. Let's see what else. DeFi Fund. We had some positions in range during the month of November, earned a little bit of revenue, but we've had most of the positions come back into range start of December. I think a lot of them are already earning revenue, probably in the first 5 days, like $2,000 in revenue, something in that range. The hope is that it continues. We hope to see altcoins show a lot of strength leading through the month of December. If Ethereum has a nice continuation from here and a lot of that liquidity starts to rotate into altcoins, we could see some significant value growth on those positions that we have specifically. Oh, Michael, you posted a picture.
I did. A little late.
A little late. Nice. Is that what you were talking about, though, or what we were talking about?
Yeah. Nice little liquidity grab.
You're looking at bottom left?
Yeah.
Did you circle it?
Mm-hmm.
Okay. Cool. Where am I at? Hold on. Getting DMs. I never know if they're important or not.
Nah,
Just shut them off. No one's allowed to talk to me ever again. Anyway, so DeFi Fund, we have some positions back in range. I'm going to skip over the client part so we can go over the numbers real quick so I don't break it up into two different sections. So revenue generation, we had some more revenue. Projections to remain the same for Q1, Q4, and Q1, just because I know what we're working on in the background and kind of what those position sizes are and kind of what's upcoming. So I'm comfortable with those projections staying where they are. I know the month of December, we had an all call with our team in Panama last week where we went over all the deals that are on the table, different points of progress that they're in, different troubleshooting, and frankly, a lot of bureaucracy and lack of urgency from some clients that, again, they have money that allows them to not be in a sense of urgency. But there are some geopolitical things changing for a couple of them that we think might pick up their sense of urgency, but we'll see. I don't know specifically what's holding them back, but we talk to their lawyers. We keep in contact. It's just the nature of the type of individuals that we're dealing with right now. There's always something extra. And depending on who you're talking to, like the lawyer represents the person, but then sometimes that person's actually representative for another person or group of people. And so it's kind of like an onion. You have these conversations with people, you get to know them better, you get to know the situation a little better, and then come to find out, oh, they actually just represent the real client due to privacy or due to whatever extenuating circumstances that exist. But it's a lot of that kind of like, I want to say malarkey. I won't say bullshit, but I will say malarkey when it comes to some of these people and clients, especially international clients that have different, I don't know, restrictions or different like preferences when it comes to their privacy, whatever it might be. So it's kind of why we're at where we're at with some of that. But I do know numbers wise what's coming up, so I'm comfortable with these projections. Total revenue generated 364,000 since we launched. This is great. Token dynamics, supply, circulating supply. Here's the interesting thing. So we had a holder redeem 9 NFTs. It's the same holder that I was selling last month. Don't really care to talk about it too much, but I will point out that they redeemed 9 NFTs, which pulled like 700,000 tokens out of the NFT contract. But because of the constant burning and reshuffling of supply, our circulating supply only went up about 100,000 tokens. So despite them pulling tokens from the NFT contract, it didn't cause a massive increase in the circulating supply for the protocol. The amount burned here says 7.8 million, but as you saw from the announcement right before we started, we hit 8 million burned. We started at 75 million tokens, so that is a little over 11.5% of the total supply burned since we migrated, which was almost exactly 8 months ago. So that's not bad for an 8-month period where we are not actively and aggressively trying to burn tokens. We are simply letting the mechanics do their work on a daily basis. Someone posted in general chat that the 8 million is too many. 8 million is not too many. I want to burn 80 million. Wait, no, 75 million. I want to burn 71 million. So there's only 4 million tokens left in the entire supply. Now that would be cool. Okay, moving on. Fund diversification. We show this one every time. It hadn't changed. I'm going to venture to guess this has been an identical graphic for the last 5 months, mainly because we've kind of been in a holding pattern with the fund and where it's diversified in different allocations. So if you've seen this in the last 5 months, you're looking at the same sheet. Numbers are the same. We saw an overall increase in the protocol value of say right around 12% for the month of November, and I can almost guarantee you it's probably up another 12% in the first week of December, just because of how the numbers worked out for the end of the month. And so a lot of our positions increased in value. That's counting, that increase in value is also counting the small amount of expenses that we have for the team salaries and hosting fees that we pay on a monthly basis. Fund allocation, I kind of had this conversation last update, but obviously we didn't post the recording, so we'll post recording this time. This chart looks funny because so much of the balance sheet total is allocated towards client services. Obviously, we are all in on client services and what we think it's going to potentially offer us long term. As we bring in revenue, these numbers will rebalance. So as we bring in revenue, the client miscellaneous that's allocated on this page will shrink in percentage. We'll have new positions opening. We'll have existing positions growing in percentage. Just a percentage bar chart that kind of the visual representation of our commitment to client services. It's not really anything that shows a different narrative other than we're committed to client services, and then here's all of our other positions. None of the other positions are too overly committed or allocated to. Operational assets, this kind of ranges a few $1,000s every month, depending on what's in the wallets that isn't part of liquidity or part of the DeFi Fund positions. So this month it's $3,600. Last month it was $1,700. So it's technically up $1,200 or $1,900. But this number just ranges a bit. The metrics matter more than anything. Like I said, the DeFi Fund was up $27,000 just on the DeFi Fund. So that's an increase of, I think, like 8%, 8.5%. With $1,900 in yield. Like I said, there's some positions that yielded a little bit during the month. More yield. I think we have as much yield for the month of November as we do the first week of December. So that kind of tells you the difference between some more of those positions being in range and earning revenue versus the previous months where it kind of just was hodgepodge, lower volume days. Treasury allocations, that's the overall value of the treasury, counting the protocol. And there's some other expenses in there as well. That one was up almost exactly 40,000. So that's like 12%, the 12% I was talking about. And protocol metrics, the ones that we always focus on are 9 and 10 here, LP to circling market cap ratio and backing LP. We are still at the 40-20 number, which is fantastic. It's a very healthy protocol. The APYs for single staking, 16 within 100ths of a percent, 16.60, and ended the month at 16.61. And then the farm APY was 44, now it's 42, so it's marginal change, maybe 4% change in APY for the farm. Still a very strong farm APY. That's been the APY since we migrated. It's fluctuated from 60% to 40. Still super strong for the whole year. So after 8 months, you're looking at an APY of 27% on a farm. That's basically the price has been pretty stable. So it's that APY is a pretty true number. And the treasury increased by $39,000 for the month. Token supply and burns. We kind of talked about that. So the NFT contract is what I was talking about. So right here, it was 11,500,000. Now it's 10,800,000 because of the NFTs that were redeemed. However, the circulating supply only changed about 70, 80,000 tokens. So because of the mechanics, we absorbed that reduction in NFT contract tokens almost completely. And so we burned almost 600,000 tokens for the month. And then cumulatively, we've burned, I think, 8 divided by 75 is, it's like, 11%. And then market token buys and burns. So we spent about $12,000 in buybacks, which was almost within 4 decimal points of 1 cent per token. So that was 1,215,000 tokens. So those are the numbers for the month. Want to run through those quick? Hey, it's 1:30 on the dot. Perfect. I did that in 15 minutes. Eldrita is there to celebrate the 8 million tokens burn. Chewbacca ass yawn. Yes. Having a moment over here. I got a runny nose. And I was working. So I was helping my brother out this morning. So it's kind of a crazy morning. Anyway, while I have you and while I have a moment to breathe, we're going to scroll back up here to went too far, the summary. So I wrote in the summary about client services, about how we're adding a new offering to client services in Panama that is essentially a combination of day trading and automation. Part of it's me, part of it is a couple friends of mine who have been in the industry a long time that are working on automating some strategies. Ultimately, what it is it's an investment vehicle to give clients consistent revenue, but more importantly, give our organization consistent revenue. So traditional investors, Michael, you can probably chime in here. If you earn anywhere from 10 to 20% a year, you're pretty happy.
I'd say that's fair.
Yeah. Okay. So we put together a pitch deck and offering to our clients that can deliver them up to keywords here, up to 7% a month return. And obviously, as a traditional finance, like someone who's a traditional investor who's used to 10 to 20% return a year, hearing up to 7% is something that piques their interest. We've had a lot of interest in this offering. We have, I think there's $25,000 sitting in our bank account right now waiting to be onboarded. We have 3 more clients that are interested, and I think all of them are going to be $10,000 each. Just to start out. So all of them want to test it for a month or two and then increase their allocation over time, which is fine with us, gives us a chance to test it as well, to rescale it, to make sure that we don't have weak points. So so our entire angle is there might be months where they only earn 3%, 4%, 5%. There might be months where they earn the full 7%. However, over the span of a year, their return on those funds will far exceed what they can find in a TradFi environment. That was kind of the whole point of BlockCentral's initial creation back when we were called something else, was to marry more TradFi circumstances with DeFi earning potential. And so if you guys have been in the guild chat, if you have your holdings confirmed by the bot, you know that I've been talking the last few days about getting back into trading. For those who don't know, I spent a number of years day trading crypto, quite successfully in my opinion. And the last 2 years I had taken time off of doing that because I wanted to build BlockCentral, and frankly, life is stressful. And the last thing you want to do trading crypto is to be stressed out. So we've gotten to a point now where I am comfortable with enough boundaries to re-engage with the market, kind of wake up all that muscle memory and intuition, and kind of go back into more of a daily day trading routine. Yesterday was my first day like officially back trading. I made one trade. I made 2.1% on the bankroll, and I logged out. And so now every day is not going to be like that. If I could make 2% a day on a bankroll, then I wouldn't be running BlockCentral. I would be trading, and you would never hear from me again. However, there's going to be good days, there's going to be bad days, but the average historically, especially in my experience, has been net positive. So to be able to trade every day, whether it's for a few minutes or for a few hours, to make a few trades each day, have those trades result in anywhere from 0.5% to 1% return on the total bankroll. That's a good day. It's a great day, really. And so for us, we can offer our clients, up to 7% a month. They're going to be ecstatic, and then revenue beyond that will be essentially property of BlockCentral. That'll essentially be our fee for doing the trading for them to see their rewards. In a traditional sense, like in a prop firm, Michael can confirm this. In a prop firm, the trader usually keeps 90% of the profits. So, like if they're providing liquidity for you to trade, and you make $10,000 in profit, the trader will keep 9,000, and the people who provide liquidity will get 1,000. Now, for us, probably going to be more of like a 50-50 split, but it's also because we do have plans for some automation. Also, the expectations for the service are not, what's the word, too ostentatious. They're not too extreme. There's something that we're comfortable with, where even if we say we make 10% for the month between the different strategies, clients will get probably in the range of 5%, and it'll still be profitable for the organization overall. Now, doesn't mean a lot if it's $50,000. You're looking at probably a few $1,000s a month in revenue. However, the idea is to scale it in an upward direction, both with client revenue that we bring in, as well as just clients' interest in the opportunity itself. So talking with Barry and talking with our team in Panama, we're in the idea of if we can get that bankroll from 500,000 to a million and be able to offer 5% a month, and have a month be for BlockCentral, the organization. Well, then all of a sudden we have a monthly revenue stream that is extremely healthy. It's new capital generation. The principal underneath of it does not depreciate because it's obviously you trade based on stablecoin into other assets, and it gives us an opportunity to kind of seize control of the means of production for the organization. So with my direct involvement and to keep our circle small, we reduce our dependency upon other platforms. We reduce our dependency on other smart contracts. We are the key generators of our own revenue. And that's something that makes me excited. So that's something that gives me a bit more confidence in what we're building. And ultimately, I think it'll provide more consistency moving forward over the next several months. 7% a month, we want that. No, it is something that I think we have. We've discussed it with the lawyers. We discussed it with our partners, even the clients we talk to. And we make it abundantly clear. It's up to 7%, So we get to a point where, the market sucks and trades aren't going our way and we can only offer 3%. They're expecting that. They're fine with it. We have great months. Let's say, for example, like every day we're just catching great trades. And for some reason, like we're pulling in 1% a day for the whole month and we have 30% month. That's when we can go back to the client and be like, hey, we're doing 10% this month for you guys, something like that. Whatever it might be. But ultimately, what we can do is we can maximize revenue for the organization without disappointing client expectations. So if the client's expecting 7 or expecting anywhere from, say, 3 to 7, and we can hit 7 consistently, then they're going to be ecstatic. And we're also going to be making a good chunk of revenue. So, but at the end of the day, it is something where I was talking to a couple close crypto friends, and they all kind of said the same thing, that I need to get back up on the horse. Like I need to get back to work. If I'm good at it, I need to just do it. And if we can build out an opportunity for clients to provide a low pressure capital, because for us, we can do 10% a month trading, and even if the client gets 4% that month, they're going to be happy, because 4% a month for 12 months is 48%. And they're not going to get 48% from any traditional investment vehicle. So we have an opportunity there to generate a good chunk of consistent revenue every month for the organization and for the protocol, with capital that is low pressure, which I'm pretty excited about. But other than that, aside from that, we do have other existing clients. Like I have a call that I need to be on as soon as I finish this one, with a client who's looking to, I think they're looking to start with about 250,000. It's just a pass-through transaction. We get a fee on, and then they have more behind it. It's a different new client from the existing ones that we have. So there's a lot of that going around right now, where we have pass-through transactions that we collect a fee on. We have some on-ramp, off-ramp problem solving that we're doing for clients that we collect a fee on. We have some collaborations with other people within our network that we're trying to help solve from origin to destination transfers for people when it comes to crypto. And then we have this investment vehicle that will, outside of those one-off revenue opportunities, this will provide consistent income month to month for the protocol. And that's not counting the DeFi fund. The idea is we need to build revenue streams, right? So client contracts, one revenue stream. The investment vehicle with trading and acquiring client capital for that is another one. And then we have the DeFi fund. And the idea is if we can start moving funds in a way that we have our money make money, that's all good things for the protocol. And so then we can continue to see growth in the overall treasury. We can see growth in the value of the token. Ultimately, my goal is to make sure that we have a long runway and that we continue to see positive movement. Now that the market is treating us well, we have an opportunity to make sure that we're taking the right steps with the organization. So we have the client side, we have this client opportunity, and then we have the DeFi fund. In my opinion, all three of them should be earning us revenue. And when all three of them do start earning us revenue, I think you'll see a distinct change in the trajectory of the token. But like I said in the last update, if everybody decided to sell tomorrow and the price of the token dropped 99%, that would suck. I would feel bad about that. But on Monday, I would wake up and I'd have the same client phone calls. I'd have the same client conversations. The token's health is not dependent upon the outcomes of the client services and the outcomes of the company in Panama. However, we have our commitments to you guys as token holders to make sure that we take care of you long term. So the 1% of people who decide not to sell, we would take care of them because we continue to work on the organization. We continue to work on client contracts. We continue to make sure that we are providing for the people that are still engaged with the protocol. Obviously, if that were the case, we would be able to buy a lot of the tokens for very cheap. We would be able to burn a lot of tokens for very cheap, and then we can start reducing supply. I don't expect that to happen. I know most people that are engaged with the organization now after this long are kind of committed long term, and that's something that we greatly appreciate. And I think those are conversations that I continue to have with Barry, is the fact that people that are here now, they've been through it with us the last year and a half. They went through the migration with us and everything else in between. And so we do have a commitment to make sure that we take care of everybody involved. You guys are, though. It's interesting that that's the way it worked out. I don't know if that was the actual anticipation from the beginning that the people here would be treated as seed investors, but that's basically what it's become. So I think we always kind of said it without saying it from the beginning, where we would talk about the tokens as like a form of indirect equity, and through that we would be able to share revenue through that medium of exchange. And so I think we always sort of said it without saying it directly. But now that client services has evolved the way it has, it's kind of just turned out to be the nature of it. But I think it's actually an elegant system to be able to do it that way through a token, because at that point, a token's no different than a share, and then you get dividends from your share. You can choose to sell the share. You can choose to hold it. Whatever it might be. But it's it is what it is. But I think it's worked out well, and it's just a matter of us closing some of these deals and getting some of this revenue in the door. But the client opportunity with the trading and stuff, that's basically my way of saying I'm kind of overweighting. Like, as frustrating as it is to be a token holder, I can't overly express how frustrating it is as the owner to be sitting and waiting for a phone call from a dozen different people. And so I've gotten to the point now where I kind of looked at Barry. I was like, dude, I'm just going to start trading again. Like the stress levels are low again. We kind of got through this past year and a half, and I'm sitting here going, you know what? I could spend my time doing this. I could spend my time doing that. But I think the best thing to serve the protocol and the organization now is to just go back to trading. And then a large portion of those returns come back to the protocol. That's great with me. So overweighting. Damn it, Fip. Also, I need to go back to the gym. You're right. Michael, do you have anything you want to add before I stop talking for the day?
Oh God, you're so good at talking.
I'm also good at swallowing my snot so I don't keep sniffling.
I'm glad you finished that sentence. That was an unfortunate pause there, though.
Yes, it was. I'm sure somebody's going to clip that later. Michael's going to come help me trade, by the way, guys. Even though he
Oh,
doesn't know it now.
oh, sounds like
That's
we need to
okay.
have a conversation later.
I know how much you don't like day trading crypto, especially not on some forex exchange.
I mean, here's my thing. The nice thing about trading it on like the CME is it's 100% transparent. The book is there, like it can't be manipulated.
Right.
And it's just, that's the annoying, unfortunate thing about crypto when you're not trading on the CME is, every exchange has its own book. Like Bitcoin may hit 110 on Coinbase, but only 102 on Binance. It's just like it's frustrating. Not to say like plenty of people do it and it's fine. It frustrates me.
Yeah. Well, I think the reason my trading style works is because I'm essentially scalp trading the ranges. Like, so for example, like yesterday, I logged in, I was on Binance through our company account in Panama, and I was looking for an asset that was overextended against the market. So Bitcoin was at a certain percentage up or down, Ethereum was at a certain percentage up and down, and then I came across Litecoin. Litecoin was like plus 12% versus like Bitcoin was up like 2%, Ethereum was up like 4%. I was like, well, that's weird. Like it already caught my attention because Litecoin was like overextended versus the rest of the market. So I pulled that asset up, started looking at the different time frames. I went from the daily to the 4 hour. 4 hour had a nice bearish divergence on it. I went down. I went from 4 hour to 2 hour, 1 hour, 30 minute, 15 minute, 5 minute. 5 minute. The 1 hour had bunch of fingers. For some reason, my brain's blanking right now. Where it tried to extend the price and then got sold down over like a 3 hour period. There's like three big fingers, and so I'm like, all right, well, it's getting ready to turn. I go down to the 5 minute. There's another bearish divergence, and I'm kind of looking at it, and so I decided to enter a trade, do $200 cross 20x leverage. It's not since I'm just playing around. It wasn't a lot of money, and it's at a certain level. So like I entered at 144. First target was 141. Second target was 138. Another target at 136, and it dropped just how I anticipated. I was about 82% confidence in the trade. Dropped down to 141. Hit 2.1% profit on the entire bankroll just off that one trade. I decided to exit, have a nice day. 15 minutes, I'm out. However, if I had more time, I could have stayed in that trade. I could have exited a third of the position at 141, exited another third of the position at 138, and frankly, I could have exited another third of the position at 136. Probably would have made closer to 4% profit on that trade. But that would have taken an hour and a half versus a 15-minute trade. Now that's me. That's how I trade. Like I'm not a trader who leaves positions open unattended. I'll trade like sometimes I'll be in a trade for 6-7 minutes, or I'll be in a trade for like 3 hours. But whenever I'm trading, I'm watching the trade from beginning to end. And versus I know some people who are more swing traders, they'll be in a position for a week or 4 days or something, and they go to sleep with stops set. But I just had a friend yesterday get liquidated during that flash crash because his stop got missed on the exchange and it didn't trigger and he lost like 7 grand. And so you have situations like that. So that's why, like me personally, when I'm trading, not too worried about the circumstances of the trade or the circumstances of the market because I look for like I'm hyper focused on very specific um uh like variables within a specific asset and I will only trade it if I can watch it from beginning to end.
I mean, green is green and profit's profit.
Right. And that's kind of my focus too is like if I can make 1 to 5 trades a day in a condensed period of time, say an hour or 3 hours, and I can make anywhere from 0.5% to 2.5%, yeah, that's going to add up over a month, you know? And so for me, I'm not worried about if we can make money. I'm worried about how do we scale the bankroll as funds come in. So if it's $10,000, great. $100,000, easy. $500,000, then you start to have conversations about like slippage and price impact and wanting to make sure that you're only trading certain assets that allow for that level of scale, which also impacts your profitability. Then you start talking about maybe having sub accounts that you trade different assets on at smaller ranges or higher leverage, whatever it might be. But it does give us an opportunity to earn revenue, I think, at scale with a little collaboration. And that's what I'm excited about.
Are you telling me you didn't full port Hawk?
I did not even touch that for a second once.
Clearly you're not the trader we thought you were.
Fuck. Dude, that girl is in so much trouble. Bye, Crypto Pigwood.
I mean, I hope she made great money.
Dude, I'm sure she made great money, but she's also going to earn herself a 6x9 sell.
I mean, that seems comfy at least, I guess.
It just doesn't make any sense. Have I ever made 100K in one trade? Michael, have you ever made 100K in one trade?
If I did, I probably wouldn't be talking to anyone right now. I wish. That'd be great. Would be great. I don't know. Are we talking about like spot and just holding it?
I guess he means like...
Or like an actual like leveraged futures trade.
Yeah, so I'm guessing that. I'm guessing he's
asking that. No. A long-term spot hold? Yes.
That makes sense. Yeah, I mean, especially in crypto, like I've made that several times, depending on the asset over an uncertain amount of time, whether it's 6 months or 5 years, whatever.
Yeah,
I think the most I've ever made on one trade. Most I've ever made on one trade, day trading. I know what it is. So John yesterday mentioned sand in the I think it was in the general chat or in the guild chat. The sandbox metaverse coin. I longed so when the metaverse coins were spiking in 2021, if I remember correctly, I shorted sand, lost a good chunk of money because it was going up and then it wouldn't stop. And because of that spike, I went and I longed mana it was basically bad risk management, something I would only do with my money. I'll preface it with this. I longed mana at like 50x leverage, my entire bankroll. And that was after I had lost in sand. So my bankroll was like down like 40%. I think that was like a $27,000 trade. And so like I started with so back then I would trade $10,000 on a daily basis. So what I would do is I would have my $10,000, I would trade, and then I would move my profits out of my futures account into my main account. spot account or like whatever on the exchange. So I'd always reset my bankroll at $10,000. So every day I traded, I would start with 10,000. So I knew exactly what I made that day. Well, that day I had lost $4,000 on that sand trade, but then I made 27,000 counting my margin, $27,000 total on the mana trade.
Let's go.
And I was like, okay, cool, I'm done. And I logged out.
Uh,
Not something I would ever do with client funds, but it was something that back then I was just using my own funds. And even actually, it's funny. I was just talking to a different buddy 2 days ago. We were talking about this idea of trading, like going back to trading and kind of like the final thought process of it. And he was telling me a similar story where there's moments where you will make a bad trade and then you like your intuition tells you like, oh, this is a good trade. There's just bad timing, and then you get into another trade of a similar circumstance. He goes, well, one time I think he longed a coin and it dumped, and he was just going to wait for it to bottom out to re-enter a long. And he's like, every like ounce of my body was telling me to like long it again because you're stubborn, you have an ego, you think you're right. And he says every ounce of my being was telling me I should re-long it, even though I just lost my ass longing it, because I know it's gonna rebound. He goes, but I decided, you know what? I'll short it. He goes, I'll do the opposite of what my intuition's telling me in this moment. He goes, I shorted it, and the some bitch dropped like 20% after he shorted it. He was like, it was the best trade of my life, and he goes, it was the opposite decision that I wanted to make. He goes, sometimes trading's like that. Sometimes like you either shouldn't be trading or the market's going to move in a way that violates your intuition. He goes, those are the days where you probably just shouldn't trade. He goes, but you have to like recognize it and be okay with that being an off day. Because like if my intuition's right 70-80% of the time, that means 20-30% of the time it's going to be wrong. And those are the days where you just go, you know what? I think I'm done for the day. I'll come back tomorrow. And if that means you have a small loss that day, or if the profits that you were hoping to get that day aren't as high, is what it is. At least you didn't lose 20%, 30% of your principal because you were trying to you're trying to force trades instead of letting like the trades come to you. And so I'm sure we could spend hours talking about like the philosophy of like that psychology when it comes to trading, but it's just stuff like that that kind of like you get reminded of even in small moments when you start to look at charts again. You start to think about like entries and exits and everything that you're trying to do to maximize profits but minimize your risk.
I just like to counter trade myself.
You should counter trade yourself. It'd be hilarious if you just ended up break even.
Great day of trading. Didn't lose any money.
Yeah. Like you 100% counter trade yourself, and then you're like, great, I did awesome on the market day. Oh yeah, what was your final P&L? 0.
I mean, zero's not negative.
Yeah. Yep. If you're just hunting to, I guess you could do like, for example, like Hyperliquid just did their airdrop, right? I don't know if you were a part of that or anything.
Oh God, I wish I was. Because I trade everything on CME, so I wasn't trading on Hyperliquid.
Right. But situation like that, like why wouldn't you counter trade all of your trades? Just basically run a delta zero or a delta neutral trading strategy that where you just pay fees, but you're collecting all those points for the airdrop. That makes sense.
Just wash. That's all.
Yeah. Not that we would recommend you guys do that. This is not an endorsement of wash trading. We're just simply talking about hypotheticals here. Anyway, I think that's the update for the day. We're going to cut this off. Michael, thank you so much for joining us. It's always good to hear your voice, have you here. We're going to do some giveaways, and then this is our commitment to you now that Michael is here, that we're going to have this playback and the report posted by end of day tomorrow, Saturday.
Oh, snap.
So we will get that done for you guys. Make sure you are all informed. But I'm very excited about what's coming up. I think I've said that last few times, so I don't want it to come across disingenuous, but I am excited about the fact that we're going to kind of seize back the means of production a bit more with the revenue. I'm going to make sure that the DeFi Fund keeps printing now that we're back in range with some of these positions. But also, like, we just want to make sure that we start, like, 2024 was a year of hoping clients would land and revenue would begin. And I think 2025 for us is going to be we're just going to make revenue, whether or not we have to make it ourselves or we have client contracts that are fulfilled, whatever it might be. But I think like starting now, leading into 2025, it's just we need to kind of seize control and start creating it ourselves, which I'm excited about. So, all right, we're gonna do some giveaways. We're gonna do $10 in block to 3 people.
Block 2.
We're gonna block 2. Oh no, don't say that. Although I think Triz has that in his name. We are going to do $10 in block to Sir Cork. I saw you in the chat or in the audience the whole time. We're gonna do $10 to Feldspar, and we are going to do $10 to let's do Wax Nation. $10 in block. So I'm going to tag you guys in the general chat, and we will get you your $10 in free block. I appreciate everybody for being here. We'll get the update posted tomorrow. And last but not least, Feldspar just mentioned it. NFL Pick'em. If you're not American, doesn't matter. We've had multiple non-Americans win the NFL Pick'em weekly. However, we are putting more money in the pot for people. So before we were seeing the pot with 2,000 block, about $20. Now we're seeing the pot for the remainder of the regular season with 6,000 block, about $60. So we've had non-American win 2 of the weeks so far. And so I promise you, it's super easy to pick 10-game winners, and that's it. And you might win a good chunk of block. So if you want to join us, that'd be great. Other than that, I hope everybody has a great weekend. Stay warm. Or if you're in the Southern Hemisphere, stay cool. Happy holidays. Actually, we have one more update. Just for December and November are sparse because of holidays and stuff, but we do have a middle of the month update, I think on the 20th, before we hit Christmas and New Year. But cool. Everybody have a great weekend. Stay safe, and then we will see you guys soon.